been in terms of the reactions? Give the algos a little bit of time to realise it's not 11 o'clock, that it dropped at 11:40, and we'll see what happens in a few minutes. Thanks so much for that, Sam. But let's head back to India's trading day. Narendra Solanki is Head Equity Research at Anand Shares and Stockbrokers. Thank you for patiently waiting. I've got to ask you, Narendra, in terms of TCS's numbers, you know, they missed on revs, they missed on margins, but they did beat on, you know, the top line in terms of their profit coming in. So in your view, how should we read their results? Is it positive, negative, or somewhere in the middle?
I think you could say that it was largely in line, especially after the previous quarter disappointment. The markets have already tapered down the expectations, and now you can actually say it's in line. There's a very marginal beat in the bottom line. But having said that, the overall trend remains to be somewhat in a decline mode. Also, if you see, the larger issue is there has been a lack of visibility in the earnings. So historically, the IT space has been a very visible kind of a sector where the visibility in earnings is quite way ahead in terms of quarters. So right now, the problem is the near-term headwinds are actually very uncertain, and it's very hard even for the managements to actually comment on the near-term outlooks. And we have been seeing ramp downs in some of the deals that has been impacting the revenue. But if you see the overall TCV, that's the order book, which is healthy, and this is the consecutive second quarter which has clocked more than $10 billion in terms of order book. So the larger long-term pipeline seems to be coming in fairly good, but there are issues in short to medium terms, and that continues to drive in the current year as well.
Absolutely. When you let it sink in that this was the slowest quarter of growth in 12 quarters in what is traditionally, for the first quarter, the strongest quarter for the outsourcing sector. What does this mean for your view, Narendra, on the outsourcing sector in general from an investment perspective?
See, overall, the valuations have already corrected, and we have been seeing it since last 2-3 quarters that the IT sector has not been performing and has been underperforming the markets. But they have also witnessed a recent bounce back, and right now they are at a very reasonable levels. So in terms of strategy, one could continue to hold on this, and there may be a sublime performance for a 1 or 2 quarter for this year, but after that, I think there should be some kind of a bounce back coming in because of the new orders which continue to get stronger and stronger. So after 2-3 quarters, there should be a outperformance.
And the outsourcing sector has quite a large weight in the overall Indian market. The Indian market has been, you know, quite the darling of late, and it's sort of bumping along the top, sitting up there on the crest and looking down on everybody else, such as China, which has been lagging. Where do you see the overall Indian market go from here, given its heights already?
See, in terms of domestic environment, the macro environment, you see the latest data, the industrial production has also came up better than expectations, and inflation, however, have came on above expectation. But overall, the domestic economy seems to be continue to improve. And if you see the overall expectations for Nifty 15, there are earnings growth of 19%, which is coming in for the next 2 years. So from earnings point of view, the growth is intact, and that should support the markets.
Really quickly, Narendra, because we're almost out of time. We've got maybe 30 seconds, a minute left. What is your #1 stock pick right now? For anyone watching, what should they be taking a really good, hard look at?
It's very hard to pick #1 because you have to see in terms of market cap. So right now we are overweight on mid caps and small caps. So those are the stocks which are having mid cap and small cap market caps. So that is the space which is to be watched out, and that space is expected to grow significantly faster than the larger ones because they are more focused on domestic economy, and right now the domestic economy is performing better than the overall, if you say, export dependent or overseas dependent companies. So that is the space you need to be looking out for.
Narendra, thank you very much for your thoughts. Narendra Solanki joining us there from Anand Shares and Stockbroker. And on that note, we've come to the end of today's session for Street Signs. Thank you so much for joining Will and myself. We'll look